It's me, Sarah G with the Smack, and I am back. And today I have Scott Salaske here again. Thank you, Scott, for being here.
Hey, Sarah.
So today we're going to be talking about how to read a Form ADV. And Scott, let's talk about first, why is it important for people to actually check out an investment of financial advisor's ADV?
Well, it's important because, a lot of times, unfortunately, I don't think a lot of potential clients and clients even know that there is such a document. Even though advisors are supposed to deliver this to a client, a lot of times, what I've seen just personally with talking to other advisors and potential clients that I've talked to, and even clients that have hired me, is that this is the first time they've seen such a document, and they have had advisors over the years. So I look at it and say, just because the government requires you to file it with them, whether you're a state regulated advisor or a federal regulated advisor, just filing it and having it available on the government website does not mean that you've satisfied your requirements to notify your clients and providing them the ADV. And then also maybe an advisor goes a step further, puts it on their website. Again, yes, I praise them for doing that, but they still need to make their client or prospective clients aware that that exists. So I think that the biggest challenge is not that, the ADVs are not to be found out there. They are, but it's a lot of times clients don't even know, or prospective clients don't even know they exist. Advisors don't go out of their way to promote that, even though they have to deliver it to a client.
Yeah, and it's important for everybody listening to this. It's important that you look at these documents because, let's be real, financial advisors don't always do a great job describing what they do accurately or describing how they charge accurately. And if these documents didn't exist by law, then in many cases, there would be complete confusion and opacity about this. So the documents exist in a Form ADV, and we're going to go through what all the different different parts of it are. It exists to create transparency, because transparency is the regulator's gift to the consumer. So consumers that are listening to this, please embrace this. They always look at what it says in writing and don't just go by what they say. Would you agree with that, Scott?
Yeah, what's the old saying? Trust but verify. I agree.
So let's look here. So we're going to actually just pull up Scott's ADV. If you go to the Investment Advisor Public Disclosure website, and this is free and it's accessible by anybody. You don't need a login to do this. So it's really easy. Okay, everybody, it's accessible. Is that here you can look, and let's type in Scott's name. And a lot of times they don't just pull up like you see here. But this is funny. Scott Christopher Salaske. That's who we're talking to here today, folks. But then also there's a Scott William Salabsky.
Yeah, that's funny. That's pretty close.
Right. So just so you know, but that's important for consumers to understand, is that they don't just pull up one advisor. A lot of times they pull up people with related names or closely affiliated names or something like that. And, a lot of times just know that you should look at the person's like state and zip code and, so look at their information and make sure that you're actually talking to the right people.
And before you get into that, Sarah, I just want to point out, you said go to the website here. A lot of times if consumers are watching this, just go to the SEC website, sec.gov, and then scroll down, and there's a database link where you can pull up what Sarah just had up on the screen here. It's not in a great position here. You'd think that'd be at the top of the actual regulator's website, because it's that important, but it's a little hard to read, and then you got to go through and click another link after you click this link to actually get to where Sarah just was before. So they could make this a little easier.
So what's this, Scott, here, the CRD number? Can you just explain what that is?
Yeah, each person as an individual gets assigned what's called a CRD number, and you can either look up an advisor by that number, or you can look them up by their name, like Sarah just pointed out when she just did a search by my name. That's your own unique number.
Right. So for all the consumers watching this, if you ask a financial advisor for their CRD number and they're squirrely about it, or they don't give it to you or whatever, they might actually not want you to be doing this research. So it's not like you're asking them though for their social security number or something private where like you could go crack into their bank account. Like this is something that exists for the purposes of being able to accurately pinpoint who an advisor is with the regulatory databases. So they should provide that to you if you ask them for that. And if not, that's a red flag. Yeah, okay. Well, anyways, the disclosures would be here. If they have disclosures, you want to click and you want to read about them. Now, Scott has no disclosures, but it's important because that is where you can find out about, a lot of times it's client disputes, but you can find out about what really their history is, if they're clean, if they've committed crimes, even if they've committed crimes that are not financial crimes, if they used a fake ID and got caught or did driving under the influence or whatever, then that's still that gets reported here as well. So it's really important.
And another thing too is not just criminal stuff; it's also regulatory stuff. So a lot of times there's arbitration panels and other ways that advisors have to put disclosures out there as a result of their behavior, and a lot of disclosures that people will see if they do have disclosures. If you're a consumer looking up an advisor, or a lot of client-focused disclosures where they may have sold a client a product that, again, wasn't represented properly or whatever the circumstances may have been, where they've had to reimburse clients or settled with fines and et cetera. So there's more than just criminal things that you need to be aware of if you're looking at this as a consumer.
All right. So after you look up the person and find out if they're a criminal or not, then you want to go and you want to actually look at the current registration that they have. And here's where you get into their form ADV. So when we look at this, the form ADV, how would you summarize that, Scott?
Well, this form that you just pulled up right here, I would summarize this as kind of what the name is. It's an application. So any advisor that's registering as an advisor with a regulator has to fill out this form for initial approval by either a state or a federal regulator. Federal is the United States Securities and Exchange Commission, and states for each individual state. So you're filling out this application, the states then or the federal regulator reviews your application and then approves you as an advisor. So this is supposed to give more granular detail about kind of basic business things. How many clients do you have? How many assets do you manage if you manage money? What types of services via checkboxes and other pre-filled in type of things that are on here. This is not really designed to be more of a narrative that we'll get into a little bit further with other disclosure documents. So this is more for the regulatory regulators to kind of put in their system. It's an application and it's approved or declined basically.
Yeah, I don't think you need to really comb over this too much because yes, it is more for the regulators. But I think the consumer still should look at what kinds of fees does this person charge?
Oh, definitely.
Because you want to know. So that would be, I believe that's item 5E. Item 5, section E, compensation arrangements, everybody. That is what I would recommend looking at on the actual form ADV. Now, the part 2 brochure that you could click from the IAPD. So you type in the person's name, go to their current registration, the firm comes up, Firstmetric here, Scott's firm, part 2 brochure. The brochure is the one you want to look at. So what's important to look at here? Yeah,
I think me personally, the very first thing I do if I was looking at an ADV brochure that you just pulled up here, I'd go right to section, basically item number 5, which kind of corresponds to what you were just talking about with the application, which is advisor fees and compensation. So this becomes very fun looking at the section with a lot of ADVs that are out there. Again, I'm a little biased because this is mine, but I think I've done a pretty good job here keeping things relatively simple and straightforward as far as fees go. And I don't think that this actually goes on to 2 pages. It just still pays on 1 page here. But I've seen advisor ADVs go on 5 and 6 and 7, even 10 pages talking about just this item alone. And I've read ADVs in this area where I've been an advisor for 20 plus years. And after I read that, I can't still figure out what I would be paying if I was a client of that firm. So this is a very, very important area to look at before really you even get into the services they offer. Because if you don't understand the fees, you're never probably going to understand the services.
That would be item 4, right?
Item 4, correct, exactly. And in this area, it should basically, at the end of the day, describe what you're doing. Are you doing financial planning for a client? Are you managing their money? Are you doing college planning? Are you advising them on elder care issues? Are you selling insurance? I mean, it should really describe all the different services that you're providing to a client. Doesn't mean the client is going to use every single one of those things, but they should be aware of what you're offering. And again, this isn't the conflict section, but there could be some initial, I think, indication here as you read the services. Could there be some conflicts that you need to be aware of later on, depending on what they're offering for services? Further down in the brochure, you're supposed to disclose any material conflicts of interest that you may have in providing the services that you described in item number 4 above to a client. And a lot of times those conflicts are rather interesting when you look at some of the advisor ADVs out there. They run the gamut from, we sell insurance in our firm, to our advisors do it in their personal capacity, all the way to we manage hedge funds and private equity funds, and we put our clients in some of that, and we're earning compensation for those, and so on and so forth. So there's a lot of things that would go in this category if an advisor has, let's call it a complex business model where they're offering many different things to clients, whether they're good or bad. But they need to disclose all of those things, because a lot of times it's not apparent. I mean, when a consumer goes into an advisor's office or talks to them on the phone or does a video call and decides ultimately maybe we want to work together, if they don't know everything the advisor offers, then they're certainly not going to know what conflicts to look for. And a lot of times advisors are offering other products and services where they are getting compensation, which would be a conflict of interest, and it needs to be described in this disclosure brochure.
In item 10.
Correct.
Right. So conflict of interest is important because, I mean, it sounds like a really complicated kind of a thing, but I guess in its simplest definition, it would just mean that when someone's getting a benefit from some activity they're involved with, they may be more inclined to encourage you, when you're their client, to participate in that activity. So if they have a hedge fund, if they're managing your $1 million portfolio and they have a hedge fund that they make higher fees off of, they may be more likely to recommend that you invest in that hedge fund so that they make higher fees off that portion of your money than they would if they were managing it as your investment advisor. So it's important that the financial advisor try to minimize these conflicts of interest. That's optimal. Just disclosing it is one thing. And of course, you always want to look at, well, what are the conflicts, and you want to have full awareness of them, because that has a huge impact on how you're charged and ultimately the service that you get.
Yeah, that's correct. And I've seen a lot of these ADVs that advisors put together. And this is, I've never seen so many in the smaller, more independent advisors. But as advisory firms become larger and multiple advisors and more products and services, potentially, whether clients need that or not, that could be another podcast discussion. But at the end of the day, this area becomes very large in an advisor's ADV. And I've seen some crazy stuff where an advisory firm would describe that we don't sell insurance, but then they would go on further in the next paragraph and say, but our advisors in their personal capacity may sell you insurance and they're licensed to do so. I don't know what the heck that even means, because, I mean, if you're an advisor and you work for an advisory firm, they have the obligation to oversee you as an advisor and should be disclosing and supervising those activities. So there's no such thing as working in your personal capacity when you're an advisor regulated by the SEC or states with a larger advisory firm.
Right. So if there's any questions on these things, make sure that you ask. Make sure that you, when you're checking out advisors, make sure that you talk to a lot of different advisors. And also just go with your instinct. If it looks like it's not written clearly or that there's something that's being hidden, I mean, just because this is a legal document, it doesn't mean that it's completely transparent either. That there are obfuscations that could even happen in these ADVs. So, okay, so now here's Form ADV Part 3, which is also called the CRS, Client Relationship Summary. And this was created to make the legal document a little bit easier to digest. So this is, again, is another in brochure format. And it's just designed to kind of condense the information that's in the ADV Part 2.
And it's a very specific format. When, well, I guess to talk about this document for a minute, I mean, there could be some confusion here because state regulated advisors are not required to fill out this document. This is really just for federal regulated advisors at this point in time. So some states may adopt this and follow the federal rules and some don't. But don't be alarmed if you go to an advisor's disclosure and you don't see a Part 3 document. That could mean that they're state registered. So you'll want to check that, because if they are state registered, that's fine. But if they're federally registered and they don't have a Part 3, then the red flag should be going up and wondering what's going on. But to the advisors that do have to provide a Part 3, this is a very specific format to this document. Not format literally like how you format the page, but there's certain sections that are mandatory in here. The SEC, the Securities and Exchange Commission, wants you to provide the exact headings that they have as their guidance, and basically provide answers to those sections as more of a narrative that kind of references back to your longer full disclosure document that Sarah just had up on the screen. So again, the intention I think is good. Sometimes with these Part 3 documents, unfortunately, because of the condensed nature of them, a lot of times it's just being very vague, opaque in the way that advisors write these, and then they're pointing people back to their longer disclosure document before. So I would say this is a good starting point if you want to, again, get a quick take on the advisor's business model and fees and conflicts, but you most definitely want to dig into the disclosure document that Sarah just had up.
Scott's ADV is very straightforward, but we want to look at a form ADV that might be a little bit.
Well, that right there, stop, go back up. This is the first thing you should look for, because I mean, right here, this is very complicated. I mean, you start reading this and there's a lot of different entities and LLCs and whatnot. And at the end of the day, you could read this and you don't even know who the advisors are, who the owners are, what entity owns what entity. So at the end of the day, the first thing you want to do is, who are you actually doing business with when you look at one of these ADVs? So I think that's an important topic, but not to distract you, Sarah, go ahead. I just wanted to point that out because some are very straightforward and they should be. Like Scott Salaske owns 100% of Firstmetric LLC. It's straightforward. You understand it. But when you get into this, there's probably 25 entities here. And a lot of times these are worded where this entity owns this, or this entity owns 25 or 50%, and so on and so forth. So it makes it very difficult to say who's advising who owns who, where are the conflicts, because once you see like an ownership firm structure like this, again, nothing to do with this company per se, because I don't know anything about their business, but it brings opportunities where potential conflicts could arise based on ownership.
Yeah, client assets under management. This is kind of important for consumers that are reading an ADV. It's important to look at the client assets under management, because you should know if you're like the biggest fish in a small pond. It's not that doesn't mean the financial advisor isn't right for you, but if they're just maybe starting out their business, or if they maybe just handle a lot of clients that are smaller than you would want to know that, because that's, again, not something that they would necessarily tell you up front. They might say, oh yeah, we have other clients that are similar in complexity or similar in size, but they might not be. And it's not that size is the number one determinant of that relationship, but you would just want to know, to get some kind of assurance, whether it's through whether it's through the numbers of how they do their business or what their business looks like. But you just want to make sure you really understand what kinds of clients the advisor is used to working with. So you get that from here, and this should line up with what they tell you when you're interviewing them too. So, and then again, item 5, fees. More descriptions of fees.
Multiple pages of fees.
Right. Well, they have to go on and on about the fees. then you know that these are complex fees, and that's important. And you probably won't have the bandwidth to really understand all of them, or to digest all of the information that they give you, but it's just useful to know when they are going on and on about fees for like, oh my God, I mean, look at that. That was like, what was that, Scott? Was that 2 page? Oh my gosh, look at that. That's okay. So it starts on page 9, 10, 11, 12, still talking about fees. Oh my gosh. So that's like 3 pages.
Almost 4 pages. Yeah.
Sorry, I have a little bit of a cold. Types of clients, also item 7, good to look at. And these are all the risks, the discussion of the risks. If you were to work with them, what were the risks that your money would be subject to, which is important. And this is where they go on and on about all of the different affiliates. I mean, the larger firms are going to have different components to them, especially if you're dealing with like a much large, large RIA firm.
Especially also firms that have like other advisors where they have rolled up smaller advisor businesses into a larger model where they might let other advisors still operate independently under kind of the parent umbrella.
So then here, client referral from solicitors. This talks about if they pay referral fees for different people to refer business to them. You may have found out about this financial advisor through a CPA, or maybe somebody that you met at a networking event or something like that. So it's important to know, again, what the incentives are. Is the person referring you because they're getting paid, because that is a benefit to them? It may be more of a benefit to them than for you to be doing business with this company. You don't know. So you have to look at it that the person that referred me in could have been biased if it was under one of these referral programs.
Yeah, and I think one of the important things in the referral programs is a lot of advisors custody, meaning hold clients' assets at typically Charles Schwab, Fidelity, TD Ameritrade, which is eventually going to roll up into Charles Schwab. So those are kind of the big 3 firms in the custody business. So I think from a referral standpoint, it's not just using outside solicitors, that they're part of programs that refer business to advisors. It's also the custodians themselves offer programs typically to very large advisors to participate in, and it's on a revenue sharing type of arrangement. So again, if you're a consumer watching this podcast, you'll want to be aware that if you go into or you talk to somebody at a Schwab or a Fidelity or TD Ameritrade or any broker dealer for that matter, that if they're referring you to an advisor that's not an employee at Schwab or Fidelity or one of those firms, and they're an outside independent advisor, there's a good chance you want to look at these sections in the ADV to understand how much the advisor is paying those firms to receive you as a referral. And again, they claim that you're not getting charged extra as a fee to be referred because they're compensating the custodians. But on the other side, could you have been paying lower fees if they weren't getting compensated? So I think, part of the thing is just be aware that where is all of the fee arrangements going? It's not usually just straightforward where your CPA referred you and there might be a revenue sharing. It's also, where your ultimate account ends up at Schwab or Fidelity or TD Ameritrade. Certainly if an advisor doesn't have an ADV, that's also important, because then the question becomes, are you working with an advisor, or are you working with a broker? Or are you working with an insurance salesperson? So again, if you talk to so-and-so down the street and they say that they're an advisor, and you begin to go do some research and you can't find their ADV, they might actually just have an insurance license selling you an insurance product, or again, work at a broker dealer and selling you commission-based products, and they're not really acting in a fiduciary advisor capacity.
So right here, this is an example of when you do research on somebody, and this is why I said, like, Scott does not have any disclosures, but if you look here, this person does. So you see the box is red and it says 7 disclosures, y'all. So that's something that you would really want to look at. We come down and you can actually see the date of each of the disclosures that each of these events happened. if it's in the recent past or if it's further back or whatever, right? So, and then you can see there's like 7 of them. And the thing is about them is that you can, I mean, these ones, they categorize them even like criminal, a customer dispute, regulatory, like they didn't provide like some filing document or something, right? Whatever. All right, everybody. So thank you so much for watching. And again, we just can't emphasize enough how important it is to be in the know and to read the documents, do all the research, and most of all, go by your instinct. If there's something that they tell you that doesn't quite match up with what the documents say, always question it. And then just trust your instincts when it comes to who do you trust with your life savings, because there's a lot of financial advisors out there. There's a lot of good ones, but then there's a lot of not so good ones. And of course, there are criminals in the business as well. So
I think one thing that we didn't talk about just real quick, I just want to touch on before we close is, and when you look at some of these ADVs, don't be alarmed when it comes up at the very top where it says, it might list a state and it'll say like terminate it. That doesn't mean that the advisor was terminated by that state. That just simply means that they have moved to a different level of regulation where maybe, again, they manage money. And if you manage more than $100 million in client money, you have to move to a federal regulation. So if you see terminations with no other registrations, then yeah, be alarmed. But if you see some terminations and they've moved to registration that indicates SEC, that's good. And I think it's just unfortunate that terminology uses termination rather than, withdrawn or some other term. So it confuses people that's never really looked at an ADV. And, don't shut it after that. Just kind of keep looking and do your research.
Oh, yeah. Also, the other thing is this cannot be interpreted as legal advice. If you have questions, please consult
do your own research.
Do your own research. Consult a compliance consultant or a lawyer, even better, if you have questions about any of this. Thanks for watching, and please subscribe.